Good morning, hello, and welcome to today's webinar. My name's Aaron Hill, and today's presentation is based on the wonderful yet clearly sometimes complex world of harmonic trading. Hi, Daniel. Good to see you again. So first things first, thank you for taking the time out of your day to be here. I sincerely welcome all traders, both old and new. It'd also be great to understand how many of us here actually trade harmonics or have at least, shall we say, dabbled with this method. Feel free to let me know in the chat box. I also encourage any of you to have some harmonic trade examples on hand, as at the end we may have some time to go over a few of them. There should be no issues with the sound or visuals, but if you're experiencing difficulties, please do let me know. And yeah, please do let me know, and we'll try and get you up and running. Those unable to watch the entire presentation, there will be a recording through usual avenues, including our YouTube channel, FP Markets. As for questions, it's fine to fire them across during the presentation as long as it relates to the content. However, we will be holding a brief Q&A session at the end. So as usual, just bear with me while I just quickly run through the disclaimer. The information contained in this material is intended for general advice only. It does not take into account your investment objectives, financial situation, or particular needs. FP Markets has made every effort to ensure the accuracy of the information as at the date of publication. FP Markets does not give any warranty or representation as to the accuracy, reliability, or completeness of the information contained in this material. So look, all that really means is it's not investment advice. This is solely for educational purposes. It's possible. So we have a comment here. If possible, please explain the butterfly design. So look, I was going to save this until I think, yeah, let me just run through the topics and that should answer your question, Surin. So look, as for so we're all on the same path and know the direction. Presentation topics will focus on the following subjects. Look, an introduction to harmonic trading. Just to be clear, most of my study and application of harmonics to the markets is based on Scott Carney's book. I think it's called Harmonic Trading Volume 1. Profiting from the natural order of the financial markets. All I can say, this is an awesome book. It's clear and concise and easy to read. I would recommend anyone who's interested in pursuing a harmonic trading approach to consider reading Carney's material. Next, the plan is to learn how to recognize the sum of the harmonic patterns used by many traders in this field. I'll cover the AB equals CD pattern, the BAT pattern, and Gartley pattern. If time is on our side, I may also look into the crab pattern and butterfly formation. These animal references to the patterns were largely coined by Carney, and I can only assume it's due to the shape of the shape a completed formation depicts. I must also point out that while I have traded the BAT and Gartley patterns, my main focus is on the AB equals CD formations. The other patterns I have never traded, that is the crab and butterfly. So it would be good to know what experience any of you have had with those patterns. So next on the menu, we have understanding entry and exit criteria. So understanding the structural arrangements of these patterns is, in my opinion, not enough to profit from. One obviously needs to recognize entry and exit conditions. It's important to note that while I will highlight common entry and exits methods, other ways do exist, and as traders adapt to suit their trading approach. And as you can see, we will have a Q&A session. This is a usual occurrence for these presentations at the end. Any questions I miss, or if my answer did not go deep enough to the answered questions, consider emailing me and the research team at marketanalyst@fpmarkets.com. gmail.com. Also, feel free to send over any thoughts for future presentations to this email, and we will see if we can create something. Let me just ping that in the chat box, the email address. Just bear with me. Okay. Right. Moving on. So what is harmonic trading? Look, the best way I can describe harmonic trading is simply through a structured approach that is complemented by Fibonacci ratios. So if you're unaware of what Fibonacci ratios are or how they're applied to charts, consider watching the previous webinars on Fibonacci. In fact, in October, I think it was, we held a webinar on Fibonacci trading. Be sure to check this out if you're interested. You can find this under the resources on the main FP Markets webpage. Or alternatively on YouTube. It essentially, excuse me. So the webinar on Fibonacci essentially touches on the correct application of Fibonacci ratios and also looks at things like Fibonacci clusters. As most of us will already know, a chart is simply a display of collective buying and selling based on the expectations of where price should move to. From what I understand, Carney's harmonic patterns attempts to portray this on a chart through his formations, essentially the greed and fear of the market participants. What harmonic patterns do well is offer relatively clear, repetitive structure to work from. Work with and produces what's referred to as a potential reversal zone, or PRZ, which I will refer to this going forward. So look, I'm just going to take the definition from Carney. So Carney defines a PRZ as a specific price structure that possesses 3 or more numbers within a defined area. He then goes on to write that it's called a potential. It's called potential because the defined area must be analyzed as the price action tests the projected reversal zone. So look, I must excuse me. So look, I must emphasize the word relatively here in terms of the clear structure that harmonic patterns deliver. As you will find, there is a subjective element to the identification process. That's what I found anyway. Others here others here familiar with the process may have had different experiences. For me, the subjectivity largely stems from which price leg to select. So how to identify basic harmonic patterns? As I briefly underlined a few minutes ago, to understand harmonics, an understanding of Fibonacci ratios is key. If you're at this part of the presentation, then I assume we're all fairly well versed with Fibonacci ratios. Just really quickly, the 1.618% or golden ratio, or phi, and its inverse, the 61.8%, are primary measurements within this field of analysis. The 88.6% Fibonacci retracement was a ratio, according to Carney, that himself and a gentleman who goes by the name of Jim Kane brought to the mainstream. Now, Jim Kane has an awesome book set on Fibonacci studies. I have that, I've read that, and it's well worth reading. Google that if you're interested. I think the box set goes for about $50, I think now. It's really easy to read, and yeah, it's well worth purchasing if you're interested in Fibonacci ratios. So look, it's important to note that other technical methods also utilize percentage ratios. So look, that we have the Dow theory. For example, that estimates price movements by thirds. I believe primary fib numbers. I believe the primary fib numbers I just mentioned also form part of Elliott wave theory. This is not really something I can comment on, as I've not really done much research on Elliott wave concepts other than during my CMT study. Other than that, I've never really tried to apply it to the markets. So without further ado, let's crack on with the first pattern, the AB equals CD arrangement, which is one, as I said, is one I commonly find use in. So the AB equals CD arrangement is made up of a 4-point structure. This goes from the A to B to C to D, a 4-point structure. Composed of an initial leg, so the A to B, followed by a retracement or pullback, depending on which way the formation is pointing, which is then subsequently, where's the marker? Which is then subsequently followed through to the downside in terms of a bullish ABCD. Now, do note that the AB equals CD pattern must possess a leg, an equidistant leg from A to B to C to D. So look, the AB equals CD is the basic foundation for all harmonic patterns. The Fibonacci aspects in the pattern should occur at specific points. So in the AB equals CD, the C point here and here will be a defining level for the completion of the pattern. Although the BC extension is critical in this structure, the most significant harmonic number is the exact completion of the AB equals CD. What I mean by this is the equal length from A to B to C to D. So this point down here. Now, in Carney's book, he refers to the Fibonacci extension as a projection. A Fibonacci, so let me just repeat that. So look, in his book, he refers to the Fibonacci extension as a projection, though in every other Fibonacci related book I've read, they refer to this type of structure in this form as an extension. Hopefully this will become clearer and should not cause too much confusion as we progress. But look, I've stuck with the my research from other authors in regards to the extensions. So look, first and foremost, as I've said, the structure should possess a symmetry. What I mean here is legs A to B and legs C to D should be of the same length. Okay, we have a comment here, logged out and back in, but no audio. Look, guys, can you just quickly do me a favor and just type Y or N if you have, you can hear me clearly and see the welcome slide? Yeah, okay. Thanks, guys. Gloria, I think that might be on your side there, because everyone else can hear me. I apologize for that. So look, as I said, the A to B legs to the A to B leg and the C to D leg should be at the same length. That's key. Once we have this, we can then look at applying the Fibonacci structure. So the retracement, so I'm going to focus on the bullish AB equals CD for this. So the retracement from B to C is important. And as you can see, we are relatively flexible from B to C within the 38.2% Fibonacci retracement and the 88.6% retracement. Now, do note the 88.6% retracement is incredibly deep for a Fibonacci for a retracement. But look, it is the C leg's final termination point that is important. I know we have some flexibility there, but we still need to focus on the final termination point, as that helps define the Fibonacci ratio for the completion point at D. Now, do note these values are taken from Carney's book, and I use these on a regular basis when looking for the to complete the D point. So what you can see on the slide is the C point retracement ratio and the BC, so the C point retracement ratio and the BC extension. Now, do note in his book, he labels this as projection. I've just kept it to how I understand it, to how I've read from the majority of other authors on Fibonacci as an extension. So just do keep that in mind. So BC extension. Again, for anyone who, yeah, I've just pointed that out. So look, so just do keep that in mind. BC, I just don't want to cause anyone confusion here. So the BC, he labels that BC projection. I label it BC extension. Okay. So with this, we have, as I said, we have some flexibility with the BC Fibonacci retracement here between 38.2% and 88.6%. We all understand that, I hope. But so, for instance, if the BC retracement finishes at the 50% retracement ratio. We then look across here, the 50% C-point retracement, which comes to this point, then should have an equivalent to 200% BC extension. Okay, so if the BC, sorry, not the BC, is the A to B Fibonacci retracement comes up to 61.8%, for example, we then have a BC extension of 1.618. And look, as you can see, 78.6, if the A to B Fibonacci retracement, the C point retracement finishes at 78.6, we then look for a corresponding 1.27% BC extension. And look, if we go for a deep 88.6, and that is the limit to this pattern, we then look for a 1.13 BC projection. Now, guys, are there any questions on this before I move on? Because I want to ensure that you're all following along, and we're all on the same path. If there's no questions, I'll continue on. I have a chart example next, so that might help cement this idea. Okay, no questions. Excellent. Oh, we do have 1 second. Let me just go back to that. So left is the fib and right is where it should go to. Yes, so the C-point retracement is the Fibonacci retracement. That's drawn from, look, so a Fibonacci retracement we draw from point A to point B, and the fib retracements will spring across at this point here. So it's the retracement of A to B, and it's the C-point retracement, so the completion point of that move here. So again, look, if we have a 50% C-point, that should go to a 200% BC fib extension. Okay, so yes, as you said, as in the question, the fib is on the left-hand side, and it's another fib as well, a fib BC extension at 200%. I'll show you how to put the how I apply the extensions as well as we progress. Okay, so this is an example of the euro pound on the H1 time frame. Now, do note that this is I've tried to draw this as clearly as I possibly can. This is an AB equals CD structure. So I've added the arrows here to show you so this is point A, point B, point C, and point D. Now, I'm not sure if many traders use this, but I found so much use with this as I understand Fibonacci, the Fibonacci application. The 100% Fibonacci projection is simply the AB equals CD ratio. So instead of having the arrows on the charts, you can simply put apply the Fibonacci projection, the 100% Fibonacci projection from point A to point B to point C, and that will extend the 100% fib projection, which comes in at 85.10 on this chart. As you can see, look, I've left the arrows on there so it's easier for us to see. As you can see, price did react off the 100% level. But remember, with the AB equals CD, let me just go back to that. With the AB equals CD bullish formations, we do have to take into account the BC extension. So knowing this, we have, look, as you can see, I've drawn on there. So the A to B retracement, so the C point retracement come in at 78.6, which is, let me just check, I can't see clearly, 85.31, I think. Nevertheless, it is a 78.6% retracement. Now, knowing this, we then go back to our files, and 78.6% retracement should provide us with a 1.27% BC extension. And as you can see, it did converge very, very closely to our 100% fib projection, which is the AB equals CD equal move. And that comes in at 85.09. So it's a very, very tight area. And as you can see, price bounced from this area. I must clarify that some traders do simply take market orders off of these areas. What I mean by that is they simply enter long at this zone and place stops accordingly. Remember that Carney looks for the PRZ to show confirmation in terms of candle structure. So he'd be looking for the candle formations within this zone. But look, you could simply take the traditional Western technical analysis and just draw a descending line down here. We broke out above here, and this could have been your entry. Look, this is all hindsight, I understand that, but I'm just trying to give you as many ideas as I possibly can. Look, some points to note on the PRZ, which is this area here. We're looking for an area of convergence, the convergence of Fibonacci ratios, and this goes for the other the other harmonic patterns that I will show. Another point to watch within the PRZ is look for simple candlestick for a Japanese candlestick analysis. One can so look for a hammer in this case, or a bullish engulfing. We rarely get bullish engulfings in the FX market because of the opening closes, but you can look for the bullish outside reversals instead, or simply drill down to the lower time frames within this area, and trade the lower time frame technical structure to look for resistances. Look for a resistance break and a retest as support. So we have some questions. Where is the bottom of the fib from the left at 12 p.m.? Where is the bottom of the fib? I'm not sure what you mean. Where is the bottom of the fib from on the left at 12 p.m.? The bottom, it's around here. It should be between, it's very, very tight actually, the 85.09 to 85.10. From what point did you draw the fib from? So the fibs in this, there's only two fibs with the AB equals CD. So the fib projection is drawn from, is a 3-point structure. So that's drawn from the point A up here to the point B to the point C, and that will extend your Fibonacci projection for your 100% fib. For the 1.27 fib extension. Now, a lot of traders get confused with extension, expansions and stuff. An extension, all an extension is, a Fibonacci extension, is an extension of the retracement tool, nothing more. So with this, we have the Fibonacci extension. We go from the point B, remember A, B, C, D. We go from point B, so this is our starting point for the Fibonacci extension, up to point C. And this will give you your Fibonacci extensions. And we look for the 1.27% Fibonacci extension. Okay, I hope that answers your question. I hope I haven't caused too much confusion. But look, as I've already said, this is in line with the current trend, and this is something I would look for in my daily market analysis. So I rarely look for these as in isolation. I always look to confirm them with other technical tools and the surroundings, so the trend in this case. So any questions on this chart, please do fire away, and I'll try to answer as right now. If not, I'll crack on. So it's worth noting that in his book, Gartley actually highlights what he considers a perfect AB equals CD pattern, and I'm not sure if there's anything perfect in the markets, but this is what he's labeled this pattern as. So the perfect AB equals CD pattern is much more simplistic, in my opinion. And look, as you can see, it consists of a C-point retracement at the 61.8%. Now, it can't go above that. It shouldn't really be below that. It should be a defined 61.8% retracement. And this corresponds to a 1.618 fib extension. Now, again, do bear in mind, he labels it, Gartley labels this as a Fibonacci projection. But in the other books I've read on Fibonacci ratios, it's always been extension. So the fib extension for me is the 1.618. This is how he determines the perfect AB equals CD patterns. Ultimately, with both the traditional and the perfect AB equals CD patterns, I found them to be excellent in dip buying and sell on rally scenarios. I also really like these patterns when confirmed with the relative strength index. I'm not sure how many of you use the relative strength index here, but it's basically a momentum indicator that measures the strength of your traded market. Don't confuse this with relative strength analysis, but yeah, the relative strength index is a great momentum oscillator, and I really like these patterns when they're converging with bullish or bearish divergence, especially when that bullish or bearish divergence is within overbought or oversold space. Next up on the slide deck is the alternate AB equals CD pattern. Look, this was originally coined by Carney himself, and all this really is an extension to the traditional. I'm sure you can see it from the slide. It is an extension to the traditional AB equals CD formation. You know, the reason for this is sometimes our AB equals CD formation, the equal legs do not line up with our technical structure, and and this is when the alternate AB equals CD pattern can step in. So look, the alternate bullish, as you can see, the alternate bullish AB equals CD pattern typically develops in patterns like the bullish crab and the bullish butterfly as their extended sell-offs, which unlike a Gartley, which utilizes an equivalent AB equals CD, the bat structure typically experiences an alternate 1.272% AB equals CD pattern. I'll explain that as we get to the harmonic formations. So look, it's important to understand that the AB equals CD pattern, equivalent or alternate, is the basis for all harmonic structures, as I've said. In most setups, the equivalent AB equals CD pattern is the minimum before entering a trade. Look, when combined with other significant Fibonacci retracements or projections, the AB equals CD pattern can define, for me, this is just my opinion, can define excellent reversal areas. Now, just to quickly explain this, as far as I understood, the alternate formation is simply an extension of the AB equals CD, in that we work with 1.272% and the 1.618% Fibonacci projections. Now, look, as you can see, Carney does state 1.27 and 1.27 in his work, though I've always used the 1.272%. It's just easier for me, and I've seen not much difference from it, to be honest. But look, all this is, excuse me, guys. So all this is, so we have the traditional AB equals CD at this point. This is the bullish formation, and remember, this can be measured by the 100% Fibonacci projection. If you remember, you take the fib from this point A to B to C, and that will give you your 100% Fibonacci projection. Now, all you do is turn on the 1.272% and 1.618% Fibonacci projections, and this is how you would find the alternate AB equals CD pattern. It's nothing more than that. We have a question. Could you use this pattern at the moment on the Dow at the all-time high to calculate possible resistance point? I haven't looked at the Dow for a while. I'll try and have a look at the end, Daniel, but I do have quite a few charts to show, especially on the crypto, in the crypto market. That's incredibly harmonic at this point. So yeah, I'll try to get to that at the end, Daniel, if that's okay. Okay, so look, I assume we're all pretty we're all okay with the alternate AB equals CD pattern. Again, any questions, do fire away, and I'll try to get round to them. So look, an AB equals CD recap. So the minimum AB equals CD completion. So it's simply equivalent A to D price legs. So A to B, C to D. The C point retracement, this is in the traditional AB equals CD, excuse me, is in the traditional, the C point retracement between 38.2% and 88.6% is the traditional C point retracement for the AB equals CD formation. The BC extension depends on the, as I've said, the C point retracement value. Remember that if the C point retracement is a 50% retracement, we'll be looking for a 200% BC fib extension. So that the perfect AB equals CD, if you remember, is the 61.8% C point retracement, followed up with a subsequent 1.618% Fibonacci extension. And also, as I've just briefly touched on, alternate AB equals CD patterns exist, which is simply 1.272% and 1.618% Fibonacci projections, projected on from the traditional AB equals CD pattern. Okay, next up on the menu is the Gartley pattern. Now I'm going to try and pick up some speed here so we can fit everything in. So I'm assuming most have heard of the Gartley, even those who do not trade harmonic structures. As for the origin of the structure itself, Carney did not invent this. H.M. Gartley outlined this pattern. I think it was in his book. You know, I'm not sure if I can remember the title. Oh, Profits in the Stock Market. Profits in the Stock Market. This is where the original Gartley pattern was highlighted. But you know, Carney is the one who credited with assigning Fibonacci ratios to this structure, because in H.M. Gartley's book, if you've read it, there is no mention of Fibonacci ratios at all. It's just the basic price structure. Right, so as you can see from the slide, the pattern kicks off with requiring a clear 61.8% Fibonacci retracement of taken from legs X to A, so the retracement of XA. So as you can see, we have we draw the Fibonacci retracement from point X to point A, and that we're looking for a Fibonacci a retracement of 61.8%, and this will be your point B. So the BC move is relatively accommodating, as we've seen in the AB equals traditional AB equals CD formations. So the BC pullback in terms of the bullish formation allows some flexibility, the 38.2% to the 88.6%. So as long as the C point falls within this range, we're good to go. We still have a potential Gartley pattern in hand. Now, with a Gartley pattern, it's important to note that the PRZ consists of, the PRZ, remember, is a potential reversal zone. And this consists of a clear AB equals CD formation. This is a traditional AB equals CD formation and a 78.6% Fibonacci retracement. Now, again, the Fibonacci retracement is quite simply taken from the X point to the A point, and we're looking for a 78.6 retracement. Now, the BC Fibonacci extension, Carney labels this as projection, cannot exceed the 1.618%. Now, do take note of this, because this will invalidate the pattern. So it cannot exceed the 1.618 Fibonacci extension from B to C. Okay. So it has to come within the 1.13% or 1.618%. Normally, for me, I find that the 1.2 in between here, 1.272% region is usually adequate, and this is what I tend to look for. And all of these ratios should converge to form a PRZ. Many traders I know do look for the perfect Gartley pattern to navigate the charts. You know, they prefer to wait for this, as it tends to have a higher probability according to their analysis. So the perfect Gartley pattern is again a little more simplistic. We again look for a B point retracement at 61.8%, and look, the difference here is, so after the B point retracement at 61.8%, so that's taken from X to A, the B to C pullback, or the retracement, has to be a precise 61.8. Whoops, where's my cursor? It has to be a precise 61.8% Fibonacci retracement from A to B. Okay, so do keep that in mind. And a precise D point should include a 78.6% Fibonacci retracement taken from X to A, and a precise 1.618% Fibonacci extension taken from B to C. This also must align with an equivalent AB equals CD pattern. Now, this should be clear and easy to spot at this point. Traders look for clear symmetry within this A, B, C, D formation. Some like to even count candles. I've seen some traders count the candles within the A to B leg, and then look for an equivalent number of candles to form on the C to D leg. For me, I'm not really into counting candles. I just prefer to use my eye as long as it's symmetrical, and that's good enough for me. Yeah, again, look, do take into account the C point retracement must be a 61.8% retracement. We have a question here. Have you seen the harmonic pattern? The harmonic pattern, a free indicator in MT5. I assume you're talking about an EA or something that will find the patterns for you. I've heard of it, but I haven't used it. Look, for me, if you want this to be your profession, your career, I would wholeheartedly recommend not relying on an EA or an algorithm to find these patterns for you. If this is what you're interested in, I would do the research and learn how to identify these structures with with your own eye. Look, there might be some use with that because it could help save time once you understand the formations. So once you understand the formations, plug it in and see what it brings up. If it brings up something that looks good to you on the charts, then by all means do some more research and look into it. That's the only way that's the only avenue I would ever consider a harmonic pattern finder. I do know what you mean though. So with are there any questions before I go on to the bat pattern on the Gartley pattern? We have a comment from the kid, heard of the Gartley but have not used it. Yes, very, very popular in the harmonic world, the Gartley pattern. So if there's no questions, I'll spin over to the bat pattern really quickly. The bat pattern, for me at least, is a very cool formation, which offers better entries. I found it, so for me anyway, and ultimately helps generate a better payoff ratio, which is the reward to risk ratio, I believe. This is a pattern that Carney actually developed, the bat pattern, as he believes this is and he also believes, he notes in his book that this is the most accurate pattern within the harmonic family, and I happen to agree with that because it's from the trading that I've done with it and the back testing, it's produced at least a 65% win-loss ratio with impressive gains. Is there a Robin pattern? No, I don't think there is. Oh, okay, you're joking. Okay. All right. Right, so I shouldn't have really said that out loud, should I? Okay, good to hear, Gloria. You've got some audio now. Fantastic. Okay, so look, the bat pattern, as you can see on the slide, is another 5-point structure. So very similar, as I said, like the Gartley pattern. So with the Gartley pattern, we're looking for, instead of a 78.6% retracement, the 78.6% retracement in the Gartley pattern, we're looking for a 88.6% retracement in the bat pattern. As you can see here, the X to A point should give us a deep 88.6% retracement in the bullish formation and a deep 88.6% Fibonacci retracement in the bearish formation. This is the most important element within the PRZ. So the B point retracement for the bat pattern, as you can see on the formations, must be less than a 61.8% Fibonacci ratio. The ideal range is between the 38.2% and 50% retracement ratios. Ideally, according to what I've read, the 50% retracement is the ideal termination point. Oops. Okay. So as I've said in the other ones, the other formations, the B point is one of the primary ways to determine to differentiate between the bat pattern and Gartley pattern. So if a pattern is forming and the B point aligns at a 50% retracement, it's of the XA leg, it's likely to be a bat. Yes, Gloria, the bearish pattern looks just like the bullish, just flipped. Yes, it does, yes. So look, the AB equals CD pattern is usually extended in the bat pattern, as you can see on the slide. It's usually extended in the form of a 1.272% Fibonacci projection. Remember the alternate patterns we touched on is simply the 1.272% or the 1.618, but here I found it usually to the D points usually coincide with the 1.272%. The bat pattern utilizes a BC extension that is at least 1.618, so at least 1.618. The BC, as you can see, the BC projection can, extension, the BC Fibonacci extension can extend to as far south as the 2.618, which is very, very deep. So I'm just trying to think of what else I can add to this. Are there any questions on this pattern? As I think I said already, the Gartley pattern are similar formations, but the latter tends to offer, the Gartley tends to offer, shall we say, the BAT tends to offer deeper entry conditions, and this will hopefully become clearer as we progress in the next slide. Just quickly touching on the perfect BAT pattern. This is again taken from laid out by Carney. Yes, I'm going to touch on what is your preferred time frame for this. Daniel, there isn't really a preferred time frame for this, but I do look at the higher time frames. That's just my personal opinion. But I know of traders that do use this on the lower time frames as well. For PRZ, you will cover later. Yes, I will be. This is next, actually, following this, the perfect bat pattern. Let me just quickly run over this. Time is really catching up now. So the perfect bat pattern, as I said, is laid out by by Carney. I've used this in the past when it has become available and found the results were particularly impressive. Over a 30 trade sample I conducted, and this was conducted on the Forex Tester. I'm not sure if any of you are familiar with this software. Over a 30 trade sample, a win rate of 64% was achieved where price reached the first take profit objective. We'll get to those in a bit. So just quickly covering the bat pattern. This is the perfect bat pattern. 50% X a Fibonacci retracement to the B point has to be achieved. 50% is not a Fibonacci number. Most of us should know that. It's just a common retracement value that many traders tend to observe. A precise 88.6% D point retracement is the defining limit within the PRZ. And we must also have a BC retracement, a C point retracement that terminates within the 61.8% or 50% retracement ratios. Now, again, this is drawn from the A to B points, and the retracements will extend once we do that. And again, we need to see that come between the 61.8% and 50% retracements. Now, do take note that a defined 200% Fibonacci extension from B to C must also converge with the PRZ. Okay, entry and exits. Given the time right now, I want to get this section covered, so we'll have something to work with following this webinar. Now, I must be clear that entry and exit conditions can be different for many of us. There's no one size fits all, as I'm sure most of us here are already aware. Some traders will look to simply enter at market at the PRZ and position stops beyond the X points regarding the Gartley and BAT patterns. Others may want to see additional confirmation form before pulling the trigger, such as Japanese candlestick patterns. Japanese candlestick patterns, for example. For me, what I like to do is usually enter at market in the PRZ itself, as I will not rely solely on the harmonic pattern. In fact, I see harmonic patterns as more of a confirmation tool at additional technical structure, which hopefully I'll have time to go over in a minute. So let's just briefly remind ourselves that a PRZ is simply an area where the Fibonacci and AB equals CD ratios converge. This is a crucial zone and is where our entry will take place. Carney in his book defines the initial take profit target. Now this is key. Carney in his book defines the initial take profit target as either the 38.2% or 61.8% Fibonacci retracement derived from the extremes of the pattern. I'll show this in a minute. I just wanted to get this idea across. For me, I simply use the 38.2% value as my break-even trigger, and usually the 61.8% ratio as either my final take profit or a place where I begin to initiate a trailing stop. Now, as for stop placement, this is relatively straightforward. For Gartley and bat patterns, traditionally, traders will place stops beyond the X point of that formation. Now, let me just quickly go back to, so with the for the Gartley and bat patterns, the stops, so entry is at the PRZ here, and the stops are traditionally below the X point, and the same goes for the bat pattern. Just very quickly, so before I get to the charts, for the take profit targets, we draw from the extremes of the pattern, we draw from the A to D point, so we draw a Fibonacci retracement from A to B, and look at the 38.2% and 61.8% Fibonacci ratios as a take profit. Now remember what I said, I tend to look for the 38.2% as a trigger to reduce risk to break even. So move my stop from below the X point to break even. Some do look to take partial profits at that area. Again, that's trader dependent. And then we have the 61.8% as either a final take profit target or a location where you would look for to initiate a trail if you've entered within the overall trend. Okay, so look, let me just spin things over to the charts just really quickly, and hopefully we can all leave here with some fresh understanding. So on the chart we have the pound dollar. Let me just check we can all see that. Okay, yes, you should all see the pound dollar H4 time frame. Now this is back in December of 2020. I really like this area as it showed some clear AB equals CD patterns. Now, for anyone new to this formation, it will take some time to train your eye to see this. Do not rely on indicators to find this for you until you understand that the measurements of the pattern. So within this formation, we are in a trend. We are in an uptrend, as you can see. So we are going to be looking for AB equals CD bullish formation. So I'm sure you can see from here, we have a point A here, a point B here, and a point C and a point D. Now, if we simply draw the arrows to mark the equal levels, this is A to B. Now, if we simply clone this and move this to, this is the C point to the D point. So look, we have an AB equals CD equal move. Now, as I said during the presentation, we can simply remove this and use the Fibonacci projection tool. We can draw from point A to B and then to C. And this will simply give you your AB equals CD formation. I'm going to leave that on there because it looks a bit cleaner. So with the AB equals CD formation, we then have to look for the BC retracement. So, sorry, the B to C retracement. So the C point retracement, which is here, how much did that extend? So let's take a look. I think it was 78.6 if I remember. Yes, it was 78.6. So we have a 78.6% retracement. Now, if you remember, the 78.6% C point retracement offers up a 1.27% Fibonacci extension. So if I just Fibonacci extension of B to C, remember A, B, C, D. So if we take our Fibonacci retracement retracement tool, let's remove the 78.6 and put the 1.272%. We can see that the 1.27% converges with the 100% Fibonacci ratio. Now this is what we're looking for. So this will be an ideal entry point for within the trend. But where would we place our stops? Now, with the AB equals CD formations, they are different from excuse me. They are different from the BAT and Gartley, as they do not have a defined X point. Now, what I like to do within these formations is I either look to, if there's no structure available, I look at the 1.272% Fibonacci projection and place my stop below here. Alternatively, you can look at the technical structure. Now here, I note that we have a Quasimodo support at this point here. So we could, within this area, we could simply use this base as our AB equals CD support and place our stop below here. Now, again, this is all hindsight, guys, but I hope the idea I'm getting across is to look for technical structure that not only supports this, but also helps provide a location to place your stops. Now, look, I'm just going to check if we had a additional Fibonacci Confluence at this point here. Let me just check. Yes, we did. Look at that. Absolutely. We had Fibonacci Confluence with the Quasimodo support at 61.8%. So this is a very high probability reversal zone, harmonically speaking, with also technical structure involved. Now, let me just clear this. If you can remember this formation, I'll leave this box on there. I just want to clear the Fibonacci ratios so it's clearer. So we have the A to B to C to D. Let's remember that. But within this, what was really cool about this, within this, so this is the B point, this is the C point. The C to B, B to C actually produced a perfect harmonic AB equals CD formation in as measured by, let me zoom in, as measured by, as defined by Carney's work. So with remember the perfect AB equals CD pattern requires a defined 61.8% Fibonacci retracement from the C point retracement, which is taken from legs A to B. As you can see, we have a defined 61.8% Fibonacci retracement. Now, with that, if you remember the reciprocal ratios that I showed earlier would helps determine our D point, which, if you remember, if we have a 61.8% Fibonacci retracement, we should have an equivalent 1.618. And as you can see, this was a perfect trade, a 1.618% Fibonacci extension from B to C. Now, with this, let me just see where remember, we can use the 100% Fibonacci projection to denote our AB equals CD structure. Look, it's just mouth-watering confluence that is there, right there. It's just a to the pip retracement there. But what we also have, do you remember we looked at the AB, the larger AB, so this is a smaller AB equals CD, a perfect formation, and then we also have the larger AB equals CD formation. So this is a bearish formation, this one is a bullish formation. Now what's great about this is within the larger one, remember we had a 78.6% Fibonacci. The confluence there is just yeah, these are the types of setups that really appeal to me. And we also have a Quasimodo resistance. Remember, see the left shoulder here above there, so we could have drawn a nice area to enter short at this point in anticipation of forming the D leg to the larger AB equals CD formation. I'm just going to delete this because I want to highlight one more. So we have two now. We have two AB equals CD formations there. And then there's one more. This is against the trend, though. There is one more up to this point. Remember, A, B, C, D. So AB equals CD. So we have 100% AB equals CD at 35.88. Now, the C point retracement in this, I believe, was 38.2%. No, it was 50%. Again, 50%. So knowing that, we look for a 200% BC Fib extension, which lines up nicely with our I hope these are all cherry picked. These are obviously not trades I've taken, but I just wanted to highlight that the accuracy of these patterns when you understand the correct application. So this is why I tend to focus on the AB equals CD formation. Look, I would wholeheartedly recommend you learning the AB equals CD formation first, because as I said, as I've already said, that this forms the basis for other more advanced harmonic configurations. So, okay, I just want to quickly pop over to the crypto market. Now, I'm sure we're all aware of what's happening in the crypto market. Bitcoin's just recently clocked fresh all-time highs, so has ETH, and yeah, it's quite an exciting time. But look, so Bitcoin, we have, let me just quickly, yeah, you can see that chart. Okay, excellent. So we have a 1.272% harmonic AB equals CD alternate pattern at around the 70,000 mark. So do be aware of this. This is drawn from the A to B to C point. Okay, these are relatively clear swings. So always look for the clear swings. Don't try to micromanage it. Always look for the clear swings. So as you can see, we have a 1.272% alternate AB equals CD pattern. This is on Bitcoin. Now on the ETH against the dollar, we have an AB equals CD projection at 4,983. This is a traditional AB equals CD pattern. Again, remember, you can highlight these with the 100% Fibonacci projection. This is against the trend, bear in mind, so it could be used as a take profit, maybe a partial take profit area. Do not expect much from this, because obviously we are against the a clearly very strong trend right now. This was a very interesting one, Litecoin against the dollar. I believe this was also a, I'm just trying to work it out. So we have so look, we have the 100% Fibonacci projection. This is A, B, C, D, traditional AB equals CD pattern. We also have the, I'm just trying to think why I applied that there. We also have the 61.8% Fibonacci retracement drawn from this leg to that leg. Now, I'm just trying to understand why I applied this 272%, because I know I have the, this is the 1.618% Fibonacci extension of the so remember this is the A, B, C, D. This comes up at the 100% Fibonacci projection. But now we know, if we measure the A point to B point with the Fibonacci retracement, we can see that terminated around the 61.8%. Now, if you remember, we have to with that we're able to use a 1.618 Fibonacci extension of B to C, which I have done there. Now, this provides a really nice area of resistance, which is currently reacting as we speak. Whether this will be enough to stop the mighty crypto market is difficult to tell, but I would be looking at this support area here for a possible retest. Other than that, I'm not sure with the crypto market. Okay, so look, on the gold chart, we also currently have this is a really nice looking Gartley pattern. I'm not sure if any of you have noted this or seen this. This is something I am closely watching at the moment. As you can see, remember the Gartley pattern is, I'm just trying to get the rules up so I don't confuse anyone. Just bear with me. So the Gartley pattern, if you remember, has a defined 78.6% retracement, and that comes in at around, let me just try and get the 1863. And we also have a 1.27, I'm just trying to get the levels. Let me remove this box a minute. A 1.272% alternate, I think it's an alternate, AB equals CD. Just bear with me a minute. This is the 100%. This is the 100% marks the AB equals CD equivalent. which is one of the rules for the Gartley pattern. And then we have a 1.272% Fibonacci extension from B to C. Look, we can all see that they're marked on this chart. So X, A, B, C, D. So within this area, we are looking at a potential reversal in gold, technically speaking, from the Gartley pattern. We did actually get a nice, I was watching the markets yesterday, we did actually get a very nice reaction from the level, as you can see, last night, yesterday. But the gold bulls are still at it right now, as I think the dollar index is underwater. So yeah, do keep an eye on this. And finally, I have one more, and I think this is the bat pattern. Yes, this is I think it's a traditional bat pattern on the dollar CAD H4 time frame. As you can see, we have a defined 88.6% Fibonacci retracement from the X leg to the A leg. And we also have a 1.272%. So this is the, remember in the bat pattern, we look at the alternate AB equals CD patterns. This is one of the key definitions laid out by Carney, is a 1.272% alternate AB equals CD. And that's drawn from, again, the projection A to B to C, and that comes in at this area here. And we also have a 1.618% Fibonacci B to C extension, which, oops, sorry about that, which is, oh, I've changed the chart. I'm sure, hopefully you can remember that. I'm not sure what happened there. There we go. Yeah, so this is a really nice bat pattern that I think had additional confluence on the higher time frames. Yes, we did. We had a 61.8% Fibonacci retracement ratio on the daily time frame, and that comes in at 28.80. So for me, the idea is these patterns are very high probability in the right locations. For me, the right location is at additional technical confluence. Now, these are the ideal charts to get some questions going. So I see we have some questions. Let me just get back. Okay, the comment from the kid, the diagram is confusing. The bullish pattern shows downward CD movement. What diagram are you referring to? If you can just let me know and I'll come back to that question. Oh God, I've lost the questions now. Just bear with me a minute. We have a question from Daniel. When you get the time, can you put the bat pattern picture up again? Okay, Daniel, I will do in a second. Looking at the charts, this is a question from comment from Matt. Looking at the charts, do you forget about very specific measurements of harmonics if the picture, the harmonic picture, looks good, but also matches with supply and demand pivot or Quasimodo line? So Andrew, for me, as I said, these are fantastic confirmation points. In fact, my mentor, the one that showed me these, he used these to confirm, just to confirm structure. So, for instance, if you had a higher time frame, say, I saw you mention Quasimodo line there, so I'm sure you're familiar with that. So, if you have a higher time frame Quasimodo resistance, say on the H4 time frame, and you go down to the say M30, the 30-minute time frame, and you happen to spot a bearish bat pattern or Gartley pattern, that would help so much confirm that level. This is how I use them. Or alternatively, you can find them on the same time frames along with additional technical structure, be it Fibonacci ratios, be it supply and demand, clear-cut support or resistance, and things like that. But yes, I do. To answer your question, I don't forget about very specific measurements of harmonics. They need to be. It needs to be clear-cut for me to take a trade. Look, if you're going to risk money in the markets, you want to make sure all the ducks are lining up. That's just my opinion. I don't like to. I like to trade with reasonable confidence and know that I've followed my plan to the T. A question from Jonathan. Have you read any empirical evidence behind this? Does Carney provide it? I'm not sure about that. I'm not sure if Carney provides it. he doesn't provide any evidence. No, that's a fair point. He doesn't provide any evidence. I think he leaves that to you. Not that I know of. He might provide it on his website. He has a detailed website, Harmonic Trader, I think .com. Do check that out. But for me, I have done back tests on this. I do trade with the AB equals CD, and for me, I found it to be above the 60% win-loss ratio with really impressive average payoff ratio. But look, as I'm sure most of us will know, that can differ between each of us. You know, just because I have a reasonable success rate with this, it doesn't mean other traders will. I might look at the Quasimodo resistance, for example, and deem that higher time, you know, a reliable structure to use a harmonic pattern as confirmation, if that makes sense. A question from the kid: I use Bitcoin as a type of index for other cryptos. Can you revisit the Bitcoin chart? I will do in a second. The kid, just want to check if I've got any more questions. What is your favored pattern? As I said at the beginning, my preferred pattern is the AB equals CD formation. I think I've got to all the questions now. Someone asked if I can go back to the Bitcoin, crypto charts, which I have done. If you could leave it, let me know why you wanted me to go back to the crypto charts. Right, guys, are there any other questions on this? I've thrown quite a lot at you, I know. Oh, there was something about the incorrect diagram or confusing diagram. Let me just go back to that. The diagram from the kid, the diagram is confusing. So which diagram are we looking at? I'll spin things back to the, just really quickly, spin things back to the, let me just check that's coming up. Okay, so the diagram. So they shouldn't really be too confusing. Again, do check the recording. The bullish, the AB equals CD should be facing downwards. The bearish, the AB equals CD should be facing upwards. You say that the bullish pattern shows downward CD movement. Yes, it should. The bullish pattern should always show downward CD movement, and that goes for the perfect Gartley as well as the bat pattern as well. Okay, are there any other questions to that? Yeah, the bat pattern, I'm on that now, the kid. It should be. The bat pattern should show, the diagram could do with another line showing the bullish turnaround. Oh, I know, I see what you mean. Yeah, I've seen that on the internet. I actually took these images from Carney's book, so I blame Carney a little bit. But yeah, I know what you mean. What you mean is so many other authors do this. Users of this, they do just so none of us are confused. They add an extra arrow here to show you this is a bullish formation and this is a bearish formation. Yeah, you're right. I should have added that really. Yes. So look, that's just to show that this is a bullish formation. This is a bearish formation. I mean, I've labeled that there, so it should be pretty self-explanatory. But yeah, other than that, so are there any other questions regarding this? Trying to remove these, just bear with me. Okay, I'm going to get to the end now. Okay, so there don't seem to be any other questions. So on that note, I believe that's pretty much all we have time for today. Thank you so much for taking the time out of your day to be with me. I really hope you're able to walk away from the the webinar with more informed than when you joined. Look, again, as you can see on the slide, comments and feedback, please send across your feedback to marketanalyst@fbmarkets.com or support@fbmarkets.com. Look, Andrew, I see you left a comment there. Thanks for the webinar. I managed to hurt my head a bit. Yeah, I do understand that. Harmonics hurt my head a lot. But look, if you want any further clarification or you're unsure of anything, please do send me an email and I'll email you with some more info, where to pick up the book, where points to look out for and things like that. Yeah, so hopefully, and then you'll be able to work with something. All right, we have a quick question from the kid again. Question to qualify: these patterns do not confirm the trend and only a you know, when you say confirm the trend, I would never use this pattern to confirm the trend. I would always use it as a confirmation tool within the trend. So for me, trend identification can be used, you know, with a trend line, support or resistance and stuff like that. And the ADX indicator, of course, is a trend following indicator. You can even use the MACD, that's a trend following / momentum oscillator for the trend. But yeah, look, harmonic patterns are confirmation tools for me. Some other traders might use them differently. Again, guys, please do email me if you have any questions or any feedback. Did I go through this too quick? Would you like another webinar on this where I go more deeper into one pattern or something like that? Please do let me know, and I'll try and sort something out for you. Okay, so with that, have a great day, and I'll see you all again very, very soon. Thank you.